What's up, YouTube? Welcome back to the Wallet Monkey channel, where we give you all the credit intel you need to grow your wallet. Today, we're going to talk macroeconomics. Again, we're going to talk about inflation, and is right now really the best time for you to get a new credit card? Meaning, are you going to get the best sub or sign-up bonus right now, or should you wait? Now, shout out to Kilo in the Discord. He brought up this point, and I think it's a really valid point. So I wanted to kind of dissect a few things with you and hopefully help you understand and make better decisions. So understand, first things first, is traditional markets tend to be, they tend to lag quite a bit to reality. They tend to lag because they're based on perception. And perception is kind of puppeted out of mainstream media. So when mainstream media tells you everything's fine, but you're paying double, triple, 10x, 20x for your chicken, you know, it takes a little bit of time for like everyone to kind of catch on and be like, oh, they're lying or wrong or whatever you want to say they're doing, okay? At minimum, ignorant, right? So there's this huge lag between like reality versus what you're seeing in charts. So understand that first and foremost. Secondly, there's even a larger lag between that reality and usually what analysts are telling you. That's why it's very low value to listen to analysts. What I mean is the bigger they are, the blue check mark, the national syndicated TV show, those people tend to be the worst. Just you can go back and historically look at track records. We're talking about track records of people like Jim Cramer, CNBC, Fast Money. They are usually way off. Okay, they are marking top and bottoms with their words. So they are top and bottom market indicators. That is their value. And so that's even a meme to understand, is that, usually these, and just pay attention to it, start to look, and you'll see for yourself, is that they are top and bottom indicators. So inflation, understand for you to be seeing this reflected in inflation, it's taken a long time for that to happen. So it can't just go away. And if this is your first cycle, if you kind of forgot what happened in 2008, 2009, great financial crisis, well, welcome to the party. I can tell you that with the inflation rates the way that they are, you didn't, obviously, look back on the charts, we didn't face this in the great financial crisis. The last time we faced something like this was in the 80s. I remember back in the 80s, I was still a kid, but I remember interest rates being like 13 to 17%, which is insanely high. And there was obviously an inflation problem. There's a couple market cycles, like small ones, market crashes back then, domestically and internationally. But you can go back and study that for yourself. It's interesting to go back historically and see. Again, history doesn't repeat itself, but it often rhymes, is the saying, because it does. There's something to take away from each cycle in terms of a behavior pattern that the markets that occurred in the markets, right? Because people are price is people, and that really doesn't change. So from cycle to cycle, that doesn't really change. So now we got crypto, we got this new magical internet money. It's not really that different this time around. Fear is fear and greed is greed, right? So anyway, all that being said, to kind of note, okay, if inflation is 8% right now, this is going off their CPI numbers, which they recently, Bureau of Labor Statistics stated that they were going to use a 12-month rolling average versus the older model that they used. That is a way to hide or smooth out the effects of inflation. Hate to say it. And it's not the only model, by the way. So just because you're seeing CPI like we're seeing in front of us, which is a 40-year high at 7.9%, there are other models, which I'm going to show you in just a second, which show us that it's over 15%, depending on how you're calculating it. So you're seeing this on the ground, right, with the cost of food. So inflation, the CPI number does not mean much, okay? But it is a good sentiment check. And so is this just gonna fix itself? And then what are their tools? What are they gonna be able to do to fix this? They can't print more money. They have to raise rates, which a great proxy to tell you how far behind the Fed, the Federal Reserve, is with raising rates is the euro dollar. So go check out a euro dollar chart, and as it sits right now as I shoot this video, we are about 8 rate hikes behind. Since the average rate hike is 50 basis points, you're looking at an interest rate of somewhere between 2.75 to 3%. Now you tell me, with all the cheap money that's been printed, 40% of the US circulating supply over the last 2 years, can people service that debt at 3%? Going up 3% for For some, that's going to be millions. For some, that's going to be hundreds of millions. For some, it's going to be even more. So it's going to make that debt very hard to service. Yeah? All right. So this isn't just going away. This is my point. I kind of set the stage there to explain this. So now let's look at behavior patterns. Well, now that it's like the cat's out of the bag, everyone knows inflation is super high. What are people doing? Well, let's take a quick look, and then I'm going to come back to and give you an answer on, is this the best time or not to get a sign-up bonus? All right, so this is a great statistical chart to look at. This is the Fed, the St. Louis Fed. It is called Fred data. I don't know why. They should just call it Fed data, right? Would have made more sense. Anyway, this is personal savings rate, like basically disposable income. How much disposable income do people have? In the last number we've got, because this is delayed, which this is something I don't really like that they do, but I don't know if you've been paying attention or not. They tend to lag data. Even the releasing of data is 30 to 60 days behind. This is done on purpose, by the way. This is done so that you don't actually see on-the-ground metrics of what's actually happening. I've never liked this. This is a part of personal finance that is very annoying to me. So, all right. So as of quarter 4 of 2021, it was 7.6. Let's see, what's our low in this range? 6.3, and our high is right here. Since they started recording this data in 1945, our high is Corona, 26.1. So we're basically right back down to, I say the average, maybe the low end of the average, because what do we have here? 11. So I mean, if we were to like draw horizontal lines, we're kind of at the low end of our range here, right? So this is a pretty good indicator, but I got a few more. Let me pull up a few charts here. I got some recent data of what everyone plans on doing with their tax refund. This is by LendingTree. Keep in mind that this is based off of 1,039 taxpayers. I mean, there's 360 million people in the US. Again, just take this as a grain of salt. Always take data as a grain of salt. Data does not speak truth, but again, it's a great indicator to tell you where the typical down the middle mindset is, which I think we can safely say is mixed between saving it and paying off debt. This is fantastic, by the way. This is great. It's great because before we were seeing a lot of spending. We were seeing people sitting at all-time highs of holding speculative assets versus physical assets as defined by banks, the Fed, etc. Physical assets, or what they call real assets, are land, commodities, boats, anything that's physical, right? That is tends to hold on to value. Those are considered real assets, and speculative assets are treasuries, are speculative assets. So equities, cryptocurrencies, everything else kind of fits into that, right? And so we're seeing record high amounts of, and I've covered this in previous videos, of people holding speculation. So this is great to see. Hopefully this means that like reality sunk in and people need to save. Consumers and taxes 2021 versus 2022. Relying on getting a tax refund. Planning on saving. Will take on debt to pay tax bill. Okay, so there you go. It really hasn't changed that much. Still heavily relying on it and going to save it. So good news there. All right, so that's kind of a quick look. Again, that's just a small snapshot and representation of where people's minds are at. But I will tell you that inflation is definitely on everyone's mind. That it's like now everyone knows about it. So does that mean that more people are going to be going and getting credit cards right now? No, absolutely not. So, okay, banks, once again, are in this position to where we're not in a recession, by the way. Nobody's saying we're in a recession, even though we are. We never left it. Shortest recession in the history of humanity, essentially, was this 2-month Corona recession. There's still people out there claiming that, we're out of it and everything's fine. We're not. Everything's not fine. 2 months is way too fast to have a market correct and have all these things iron themselves out, so now you're starting to see the kind of knock-on effect of that, of supply chain issues and those sorts of things are now starting to creep up, right? Because they were there then, and now we're just getting the effect of it. So that's like a 2-year lag. So, again, keep that in mind. All right, inflation is high. Right now is not the best time to get. I think that the sweet subs haven't even started yet. I could totally see a iteration of this and a version of this to where credit card companies start to get really desperate to bring on new customers. because everyone's going to tighten up again. They're not going to spend. Yeah. And so like, what is their options? They have to make better sign-up bonuses to attract more people in, correct? They have to lower their standards once again to get more people to come in. And again, it's a little bit different than a recession, because during a recession, you notice the banks tighten up. They don't want you to come in. They don't care, because now you need money. So the door's closed for business. But when you need money, so like when you need money, door's closed. When you don't need money, door's open, right? So now we have everyone saying that there's no recession happening. And so people should be signing up for credit cards right, left, and center, right? So if we're not seeing that, then that's going to put them into a position to where they have to sweeten the deal to get people in the door. All right. Lastly, let's end with some alternative CPI metrics that you can go off of. What's funny about this is this site tends to get a really bad rap. Like, oh, it's a conspiratorial website. But what's funny is that really all they're showing is old models that we used to use. So this top chart is based off of the 1990 CPI model we used to use, and that puts us over 10. And then this one here is the one that I like to go off of, is the 1980 framework for CPI, which again, interestingly enough, go back here, in the 1980s, where was our inflation? 15%, well, over 14. And if we look today, where's our inflation? Over 15%. So here it just touched. Here we're over. So let's call it 16, 17%. Interesting, right? So off that same model, we're actually in the same place that we were back here. So we could go back to the 80s and start to look at that deeply and get some more intel on that, couldn't we? If we cared, if you wanted more information, right? But anyways, there you go. There you have it. So it doesn't really matter what CPI model you're looking at. Inflation is real. It's happening. It's pretty rough out there for a lot of families, for a lot of people. The wealth gap is once again getting stretched. Let's end on that note. Asset price inflation is a key risk. So distribution of U.S. household wealth by income percentile. Here's your bottom 90% right here. Here's your top 3%. Ownership of U.S. Financial assets by household wealth distribution. Who owns all the financial assets? Who's green? Top 10%. So did 2020 and the lockdowns and the 2-month recession, who did it help the most? Middle earners, low earners, or high earners? I remember Jeff Bezos, Elon Musk taking out record high amounts of profit selling shares through 2021. Billions, tens of billions of dollars worth. While everyone on YouTube and all these financial analysts were telling you what? Buy, buy, buy. Bitcoin going to $100,000, correct? Well, did we get it or not? No. So anyways, there's some major lessons in there. I'll leave you with that, my friends. Thank you so much for watching this video. Comment below if you got something to say. If you just want to help us get this in front of more people, click the like button. Again, comment below helps, you know, the algorithmic dance. If you're brand new here and you like this sort of thing, take a second, hit the subscribe button, bell notification, turn it to all. Be on the lookout. More videos coming soon.